Hey everyone, Andy Moss here, tradingadventures.com with your Thursday market update. Since we talked but this time last week, the market has continued to grind steadily higher, and we are now at new highs on three of the four major indices. So looking here at the SPY, here was the last update on April 9th. We had just had a large gap up on the previous day, and that has proven to be a gap and go off of this low, the sizable gap, and then up every day or virtually every day since then. Now at the second day, closing at new highs there on SPY. It's pretty stretched now. It's moved a long way in a short period of time, roughly about 11% in just over 2 weeks of trading there. So very strong moves across the board. You already know that, of course. So we're going to talk about how to deal with that here, or more about how to deal with that here in just a few minutes. Q's also at a new closing high with today's action. And actually yesterday was a new high as well. And IWM just eked out a new closing high here, finishing the day at 269.95, which is just a little better than this candle back on let's see, that was January the 22nd, which closed at 269.79. DIA has a little further to go. It's catching up, and it's back above all the moving averages, back above some of these recent anchored VWAPs and that kind of thing, but still has ways to go before it gets back up to this level. So what I want to point out is last week, the takeaway from the video really was when the market starts to run like this and feels a little hard to hold on to, what we need to do is zoom in to the smaller time frames. That gives us a little tighter precision on entries and some more applicable risk management levels. And what I mean, if you're looking back on this Thursday and going into Friday, we're right here at the 50-day moving average, which was still declining at the moment. And it's a little hard to buy, right? You're like, wow, what do we go back and close or fill in this gap, or at least partially? You don't want to chase things higher just to be getting in right when the rug gets pulled and they come back down and you start off in a losing position. And do that. And what I said at the end of the video was, for the next week or so, I think it's going to be very important to utilize those smaller time frames and take a closer look at the risk management levels that it offers. So if we consider what has gone on from there, you have here was the S&P on April the 9th and the morning of April the 10th. And what that does is give you, and just talking about if you're buying the market overall here in the SPYs or the Qs, you have an opportunity to look at setups with a tighter risk management level. So you can do things like consider long positions in this area with a stop under these recent relevant lows, or you give something down with the 5-day moving average underneath, or the relevant anchored VWAPs that were there. This is this week's anchor. If we had last week's anchor drawn on there somewhere in what would have been from this level here, then you have some more reference points to manage risk against for new long positions. And that's exactly the tactics that I've been deploying. These are the types of things that help you get in when the market is running quickly and feels like it might be getting away from you, but you want to have some controlled exposure. And that's just showing the 30-minute time frame. You can take that down a step further and go into, let me expand this out here, and maybe you look at a 15-minute time frame to get an even closer view, and so on and so forth down the scale there. So those are the things, those are the strategies that are helpful in times like this. I think they will continue to be helpful. I don't know anyone that would feel great about buying the SPY right here with RSI approaching 70 and the 8-day moving average 15, 16 points below the current price. This is a pretty drastic level of extension here, but clearly the market is very strong. So I just wanted to point that out. Those are why I throw those things in, some tactics, some useful ideas to try to help you manage your trading along the way. getting back to the overall market update, Bitcoin is trying to hold these recent gains, and Bitcoin is not so extended. It's been moving more gradually with some fits and starts in here, but it's back above, it continues above the relevant moving averages, and now it's approaching this or is at this year-to-date anchor and 4 days of consolidation here. So once again, we're going to look and see, is it resistance again like it was the last time? Well, so far it's holding up pretty well above that level, whereas last trip we see clearly it touched that and then reversed immediately. So there's a hint that maybe it's going to be a little different this time for Bitcoin. The moving averages are rising down here. We still have the 200-day, if you want to consider that. That's a little different on Bitcoin because it trades 24 hours a day, 7 days a week. So maybe not as useful there as it would be on the SPYs or the Qs or that kind of thing. But just the overall impression is the same, is that we've got a revisitation of this recent relevant high. We've got some proof here that price is holding up, at least so far in that area, and Bitcoin is looking a little better. Bonds, they're kind of still doing bond things. They're not so active. They're not moving around as much. They still have some work to be done overhead, but they look pretty decent off of this low from not quite a month ago, and they're doing okay. So the market is stabilizing in the bonds, and the stock market equity indices are continuing very strongly there. So in the meantime, commodities continue to hold up pretty well. Here's a look at crude oil on its own, still trying to hold this anchor from the breakout back in late February, and that has provided some relief to the stock market if you'd like to look at it that way. And gold and silver kind of tracking along there, just still doing their thing. And last thing we'll look at here is volatility, of course, has come pretty much straight down as stocks have gone up. So that's the market as we see it right now. The daily charts show the picture overall, but I really encourage you to take a look at what I call the roadmap. This is the 30-minute time frame of the 4 major indices, or if you like the futures version, I use that quite often as well. That gives you an idea of what the overall market is doing. I do think it's very possible, well, we will get a pullback at some point. We don't know exactly when or to what extent, but a move like this will take a rest eventually. Now, it could either time correct and work off the extension by moving sideways as the averages catch up, or it could price correct by taking a bit of a sharper dip back down to recollect itself before potentially beginning the next leg higher. But notice that the 50-day moving averages are rising. All the signs are pointing to a continuation of this strength, not the fact that this would be a failure that would reverse right away. But as they say in the market, anything can happen. Be ready and continue, whether you're looking at your indices or individual positions. Utilize those smaller time frames for now. Manage your risk. Maybe you take a smaller position size and give things a little more room to breathe. But those are some of the strategies that will have been useful over the last week or two, and will most likely continue to be useful in the coming weeks. So there's your update for today. We'll be back with a weekly look on Saturday morning. Have a good evening.